This is Rod White of Mining Network. A pleasure today to have Elemental Altus with me. Steve Bolton, the Executive Chairman, and Fred Bell, the Chief Executive. And it's a pleasure because I have known these two people for over 20 years, and they've just come together in a marriage, which we are celebrating in this interview, because Elemental and Altus effected a merger of equals 3 weeks ago, and this is the first interview that we have done since then. Now, Steve, I've been wanting to ask for some time, why did you marry Fred? What did you see in Elemental when you were in a strong position in your own right?
That's a good question, and it's a good way of paraphrasing it, Rod, a marriage. I think we already had a relationship. It's probably the best way of putting it. I was a shareholder of Elemental since before the IPO, and Fred was also a shareholder of Altus. So we already knew each other pretty well before we got married. I think the primary driver for us in the marriage was value. And Elemental had a fantastic portfolio of cash-paying royalties, trading at a fantastic value, and almost very difficult certainly to replicate and acquire. And we felt that a merger would just bring us considerable value. So that's why we got married.
And saved you 10 years putting them together yourself.
Probably, maybe not 10, but certainly many years. Many years.
And what that did was it created value through the merger.
It was one of those situations which was highly accretive for both sets of shareholders. So I'll let Fred discuss why, or what he saw in Altus from the marriage, but it was accretive for both sets of shareholders. The combined entity has far more positive attributes than the two entities on their own. And there's many drivers about that. The principal one is market recognition and the liquidity that comes from that. The combined cash flows that we've got as a business puts into a very special place, very attractive place for investors to take a look at us. But we can go into details of all that. But the primary driver was really value and what a great portfolio of assets they've got, and the fact that we knew each other already.
And critical mass.
Critical mass, and to be fair, also wasn't just Fred and I that knew each other already. A lot of our shareholders were shareholders in common. So there are quite a few investors who are both investors in Altus and in Elemental who had been backing us separately as teams, who knew what we were doing, who liked what we were doing. And I think the fact that 99% of shareholders of both Elemental and Altus voted in favour of the transaction speaks to the overwhelming support that was for the deal, but also for the common sense logic that there was in putting it.
And there was a catalyst, and the catalyst was an unexpected opportunistic bid for Elemental. So how did that impact you, Fred? And you had a number of options. You didn't just have to marry the first bloke that turned up at the door, did you?
Well, it was actually, there was. I think it's probably important to note, there was a gap between the hostile bid officially ending, which we didn't see as giving value to shareholders, and our shareholders overwhelmingly agreed with that. There was a gap between that and the announcement of the merger with Altus, and I think it's really important because that demonstrates it was an active decision on both sides, and both management teams, both boards, and with 99% of the shareholders from each company voting in favour of the merger, I think it was very readily apparent where the value was in bringing the two companies together. And I think it's commonly known in the royalty space in particular that as you increase the scale and critical mass, you tend to get better valuation multiples. But there's an awful lot more than just that. We were getting a lot of intellectual capital built up over a long time at Altus. We were getting a huge pipeline and royalty generation portfolio inside of the business that we'd never had. And so I think obviously a key attraction for investors and probably the reason we attracted the hostile bid was our portfolio of producing royalties today, giving investors exposure here, now, high quality projects. And I think marrying that with more of the same in some of the key royalties that Altus had, and I think really recent acquisitions from Altus, but putting that together with the royalty generation side, and you come out with a really well-rounded business that is more relevant, enhanced market profile, more critical mass, and crucially, a better team to take it forwards.
I agree with all of that, and sorry, I should have declared at the beginning, I was an initial shareholder in both Altus and in Elemental, so I've known both of these companies, but the bottom line in what you're saying is that you were going to be bid for, and there were several other people that approached you when that bid was made, but you got together and you had La Mancha, a significant shareholder, sat you down together and like a marriage broker and agreed to put the business together. But what is that business? You are effectively a royalty company with 160 million capitalisation today, but by broker estimates, the net asset value is about 300 million, and you're on a discount to the sector average in terms of a rating. You're on 0.7 times price NAV. The sector average is about 1.4, 1.5. But what I see as very important is it's not just the pipeline that you've got of royalties, it is a project generation portfolio that Altus had, which I think has remarkable value within it. I think it's worth at least another 100 million. So I think you're actually about 1/3 of an appropriate valuation within a year. But that's my view, and that's not your statement. But Steve, tell us about the project portfolio.
So in terms of the generative assets that we've got in the portfolio, I'll let Fred speak to the cash-paying royalties that we have. We have two key assets in Mali and in Egypt. This is perhaps the key differentiator for Altus as a royalty company. We offer more than just exposure to high-quality cash flows. We also have the potential outperformance from generating our own royalties. And we have a couple of very interesting assets, one of which is in Mali, the Deeper Gold Project. It has a net present value of about $150 million on a recently completed PEA. And we also have one of the largest land holdings in Egypt for gold exploration, exceptionally prospective jurisdiction that's attracting a lot of attention just now from seniors, mid-tiers and junior explorers trying to get in there to explore. So from our point of view, those assets complement the valuation that you're describing, but perhaps are somewhat hidden amongst it. It's not the sort of thing that the mining community, the analysts are really looking at valuing just now. So it provides investors upside exposure when we transact on those assets and create a royalty. And those royalties are somewhat long-dated options, but very valuable, I think, in terms of the quality of the assets that we've got. Aside from that, and as Fred alluded to, after La Mancha took their first investment in us in 2020, we started to acquire cash-paying royalties. The first acquisition was a $34 million acquisition of the Caserones copper royalty. It's a mine located in Chile. It's a very attractive royalty. It's generating cash from day one. And that was heavily facilitated by La Mancha. They provide us with something which we call a strategic acquisition facility. It's a loan. And we used that to part fund the acquisition of that asset. And we quickly then rolled into acquiring a portfolio of royalties from Newcrest Mining. We acquired 24 royalties, including 3 cash-paying royalties. And that complemented our portfolio with the Caserones asset, with our generative assets. And we were looking forward to another year of growth in 2021 and 2022. And then obviously the gold royalty situation happened with Elemental. It put the lights on to Elemental. And to use your analogy, I guess the music started playing a little bit. And La Mancha, seeing that Elemental were looking to acquire a stream on the Ming property. Yep. They decided that maybe that was a good opportunity to take a position in Elemental to finance what was a very good acquisition and able in many ways to help ensure that the deal would be consummated. And La Mancha have been integral to what we've been doing to get this far. As a joint company, they're a fantastic and hugely supportive shareholder. They've been making a number of strategic investments in the mining sector, and no doubt that puts us in a very strong position. But underneath all of that, we have this fantastic portfolio of assets, cash-paying assets, and also generative assets that have gone into the enlarged entity.
Well, I would speculate that La Mancha has the opportunity to invest in whoever they want to invest, but it's the relationships that they're buying into here. and La Mancha, I am sure, are interested in building a $1 billion corporation. They're not interested in 160 million, other than to help it along on the way. But Fred, when you came together, the weakness in Elemental historically had been that it had the highest proportion of cash flowing royalties of any listed royalty company, but it didn't have the project pipeline. And what I find very interesting is with the Altus merger, not only do you pick up some good quality, like the copper royalty Caserones, not only do you pick up some good royalties, but you brought within the company the ability to generate your own royalties to supplement the acquisition of royalties. Can you talk a bit about the royalty portfolio and the pipeline for future growth?
Yeah, so maybe it's worth taking you one step back in history in Elemental to when we set the company up and how we thought about it. And our strategy was, we're really attracted to earlier stage royalties in the exploration phase, but we thought the best way to build a company to that position was to start with cash flow and producing royalties. And if you go to the start of 2022, and probably the reason we attracted a hostile bid when we did, our largest royalty had just come on stream, Capricorn Totala Windomine. So just started paying us, and we had 5 paying royalties at that point. And in Q2, we closed the acquisition of a stream on Ming, which brought us up to 6 paying royalties. And at the end of July this year, the Mercedes mine started paying us a royalty. So we were in that phase where we were getting the critical mass in terms of revenue to be able to start, in our view, looking down the pipeline of how do we now build up our pipeline. We've got sustainable revenue, we're more than covering our costs in a good market and a bad market, we're going to have free cash flow, how can we now build a pipeline? So from that perspective, the timing of the opportunity to put something together to merge with Altus, I think it suited Elemental shareholders really well, because Altus had just closed a second acquisition on a large royalty portfolio, and so they were growing into 4 producing royalties this year. And so you put the 2 companies together,
you get 11.
And you have 11. And if you look at it from a 2021 perspective, Altus had 1 producing royalty and Elemental had 5. So between us now, combined with 11 producing royalties, we can now afford to have that pipeline, and we can carry all that upside exposure because we've got the revenue and the really solid fundamental base that underpins us in the medium to long term. And I think when you conceptually look at how you build a royalty company, and I think La Mancha shared this view, you really want that foundation of diversified revenue from the outset. And that is how you build a royalty company for the medium to long term and add the best value. Because we all know that it's relatively easy to scale up a company. You can go out and buy a lot of royalties there. The question is, how can you do that and create value along the way? And I think if you can have a really good lower cost of capital, and you can have free cash flow that you can invest as you grow, I think it really helps you achieve that. So the timing was actually, I think it's worked out remarkably well. We're only almost 3 weeks now post the close of the initial of the actual merger itself. So it's still very early days, but it's been really helpful knowing a lot of the team from both sides, knowing each other. That integration, I think, has made it a lot easier. And looking forward to what we can start to do together as a combined company.
Well, you're not the only one looking forward to it. You've got La Mancha assisting it. You've got South 32 involved. And technically, you've got the knowledge capital and the database of $1 billion plus corporation. But you're $160 million today, and you're looking at a revenue in Canadian dollars next year of?
Well, we generally use US, but we're talking about sort of 20, 22, 23 million order of magnitude for 2023. So again, it's...
So you're on 5 times your revenue.
Yeah. So
which is half the sector average.
Yeah. So both on a NAV basis, on a revenue basis, I think we're the lowest we've ever been as it stands today, when we actually have the best portfolio the highest quality, the longest average mine life that we've ever had, a better team than we've ever had in place. And if you look at the shareholder register, I think you wouldn't find another company our size that has the quality in our shareholder register that we do today.
Well, I think we saw that because 99% of the shareholders wanted the merger.
Yeah, and it's a testament, very fortunate to have shareholders who are looking to the medium and long term and shared the vision in terms of we want to see you build this company not into a $100 million company, but into a $500 million, billion-dollar company. And so you're not looking at an investment horizon and thinking 3 months, you look at it and thinking 3 years, 5 years. And I think that's what made the merger happen, is that common outlook for shareholders, which matched the board and directors and management teams. And so it all made it a lot easier.
Yes, I think that's exactly right. But compared to the other royalty companies, the projects that you've got that currently haven't got a royalty on them, these projects in Mali, the projects in Egypt, the projects in Morocco, there is absolutely enormous potential. Steve, Egypt, Arabian-Nubian Shield, prospectivity is probably the best in the world at the moment from a geological point of view, and you've got the political cover because of the La Mancha connections in Egypt. I mean, this is an ideal situation to advance projects and bring in partners and attach royalties when you do it.
I can't disagree with any of that. No, absolutely the case. It probably is some of the most prospective geology on Earth. Unlike many other jurisdictions, you had modern gold rushes of sorts that went in that later, let's say 200 years ago, evolved into numerous hard rock gold mines. And that didn't happen in Egypt. You had obviously gold mining from pharaonic times. The Romans were there. The British were there many years ago, but actually only really one major discovery that's become a mine, which is the Sukari mine, which is operated by Centamin's, doing about 500,000 ounces a year. It's a huge deposit. And because of the geopolitics, the history of the country, there really hasn't been significant investment in using modern techniques into exploration for further Sukaris. And it's somewhere, as a geologist myself, that I've been desperate to get into for all of my career. And thankfully, La Mancha have, as you say, very deep Egyptian roots. And Egypt itself decided to open up their exploration tenure to an international bid round process. And we participated in that with the support of La Mancha. And we're delighted now to be one of the largest landholders in Egypt as a business through our subsidiary AK Gold. And we have about 2,000 square kilometers. And also quite novel, we've spent most of our careers personally in West Africa. And you're either dealing with 20 or 30 meters of lateritic soil horizon, or you're dealing with 20 to 30 meters of jungle cover. And the good thing about Egypt is exploration there is extremely fast. So you can make discoveries very quickly, very cost effectively. You're not spending lots of time theorizing about where the gold may or may not be. We have over 100 hard rock artisanal gold workings across our licenses that we're sampling. It is exactly in everything we'd hoped it would be from a geological standpoint, and from a commercial standpoint, getting a lot of interest from lots of major, mid-tier and junior companies wanting to get into the...
Well, I should think so, because the company has a video that should be put on the website, which is a drone overflight of the area, and the drone shows 150 separate artisanal hard rock. This is not alluvial in the river gold. This is hard rock gold. And hard rock gold, when you're digging to depth, has to have high grades or the artisans can't make a living.
Yeah, actually those are satellite images and they are amazing. It looks in some places like the Klondike must have looked many years ago, and it's of a similar scale and opportunity, I would say. Now, we're going about it in a very methodical way that we tend to do. Exploration is a very risky business, and often there's a lot of smoke. The question is finding the fire, and we do believe there are numerous discoveries to be made in Egypt, and we are very confident that some of those are going to be on our licenses. Now, our job is not to build gold mines. Our job is to discover gold mines and attach royalties to them, and then let third parties invest what can be several $100 million to build a gold mine. and leave that time and that expense to other parties, and we will attach our royalty to those assets and benefit from the future success. What we're doing now on the ground is proving highly compelling, and the results are fantastic, nothing short of. So.
We should ask Fred his opinion, because Fred's not traditionally an explorationist by nature. He's a much more calculated investor in quality projects. How were you able to evaluate all of these projects that Altus had in the portfolio?
Well, I think what it did for us was it balanced the really high quality producing royalties, giving us exposure to commodities, giving us optionality on those existing mines today, with that really high quality exposure to some of the best ground potentially in the world through Altus. And two of the founders of Elemental with me, Peter and Richard, both technical backgrounds, both long career at WMC. And I think if you talk to them over their careers, from the beginning of Elemental, they would have said the value is created through exploration and discovery. And a royalty on an operating mine is a de-risked way to give you optionality on that. But at the right time, if you can build in even greater optionality through coming in at the stage Altus is at, the foundational stage, with really potentially high quality assets, that is a great accessory to building a royalty business.
Particularly as you can attach royalties to each project as you move it on.
Yeah, absolutely. And I think the hardest thing with that model as a whole is you often don't get value for it in the early days. But some of those royalties and some of those projects can actually turn out to give you the best returns in the medium to long term. And I think that's where the portfolio approach of putting it all together, it has that balance to it that we didn't have before. And that I think is, likewise for Altus, is enhanced when you put two companies together.
But I don't think investors have yet latched on to the new company, because it's only been in existence for 3 weeks. You've now moved up to 11 cash flowing royalties, and you've brought in over 50 royalties in total. Yeah. And this is a stunning achievement to have been done in a couple of months.
It's certainly been busy. I think putting it together has been it's been a lot of fun, and one of the really exciting things is that this current period of 3 or 6 months, we're simultaneously people on the ground adding value in Egypt. Simultaneously, we've got new royalties coming on stream that are paying us sort of have never paid us historically. So we've got growth on both sides. And I think for us, being able to get out there and tell the story as a unified company together and get that message across and demonstrate it to people as well, I think that will be really important. And I think that the next 3 to 6 months, there are a number of really clear catalysts that are going to be occurring that I think will show that and illustrate it to investors. And I think that's really important for us.
They will then understand the value proposition better, because they'll be obliged to see a number of announcements.
Yeah.
But for a relatively young man, Fred, compared to some of the senior royalty people, but where do you think Elemental Altus will be in 5 years' time? What would you like to have?
Well, I think one of the attractions for us in the merger, and I know Steve shares the view, is that this isn't the end result. What we're putting in place is a fantastic platform, and it's an even more attractive platform for other royalty holders and for other royalty companies. And I think in the last year we've seen a wave of consolidation in the space, including us. It's been 6 M&A transactions. So I think that there are opportunities there and options to discuss with other like-minded opportunities. And that can be companies, it can be individuals holding royalties, it can be companies with portfolios. So I think that's one angle. But also now we're going to have a better technical team combined than I think we've ever had before. And I think that in the current market, we will have increasing free cash flow to be able to both organically generate projects through the royalty generation side, but also take advantage of market conditions and make some really good quality acquisitions ourselves. So it's a sort of three-pronged approach: generating royalties, acquiring royalties, and also looking at larger sort of M&A opportunities as we go. And I think all three of those will mean that we probably stand in a very different position in a year, 2 years' time to where we are today.
I think also what's important is the support of your long-term shareholders. You've got La Mancha with 21%, you've got South 32 with 9%, isn't it? And then you've got half a dozen others that we all know quite well that are together. This is one of the best quality shareholder bases in the business. You're not really dependent upon retail.
No, I think it's look, we're very fortunate in that we've both managed to attract, and we had some of the same shareholders, we've both managed to attract some really good quality institutions, and I think importantly some institutions, professional investors who are familiar with the royalty space. So they understand what we're doing, they understand how to build a royalty company, and they understand what attracts value in the royalty space. And so I think when you put all of those ingredients together with a good management team, a great portfolio, and all that intellectual capital from the royalty acquisition and the royalty generation side, and you put it all into the melting pot together, as we are with this merger, I think you come out with something that's really special. And I think you come out with something that is, for our valuation today, I think the best standout opportunity in the royalty space that is there.
And I would say that those key shareholders know that. They're not selling, and what they see through a royalty company, you're getting project risk diversification, you're getting jurisdiction risk diversification. You're not going to be asked to contribute money to a project because you bought into the project already and that's with their money. I think it's an extraordinary value proposition, and the value is not reflected in your current capitalisation. Both of you, and in fact all management, have significant positions in this company. So we really got purpose, haven't we, to build a large royalty business.
The comment about having skin in the game is important. So the combined entity, the board and management own just over 14% of the company. I think that's material, and I think it's significant because that alignment of interests is key. The management and board are putting their money where their mouths are. That ensures discipline in capital allocation, that the right decisions are made strategically in terms of royalties that we acquire or royalties that we generate and the transactions that we do. And I think longer term investors generally do well by backing management teams and boards with whom they've aligned. And we certainly believe in the potential for Elemental Altus. It's a fantastic platform, as Fred eloquently put it, and we expect a lot of value creation and realisation, more importantly, in the next couple of years. So.
And you've got the pipeline to deliver it.
It's a very long pipeline.
Yes.
And it's something that a lot of royalty companies would really like to get their hands on, no doubt. And we're only going to grow it. I mean, over the next year and 18 months, we've got a lot of deals under review, a lot of opportunities to add to the pipeline. It's going to be a very exciting 12 months ahead. And
the two of you work well together.
So far, yeah, I'm very good. I think, as I say, I first put some money into Elemental many years ago, and likewise Fred into Altus. We know each other very well. And we work, it's a very good partnership.
That's a foundation for success.